If you are watching this in 2022 or 2023, you know exactly what it feels like to face inflation. Inflation can reduce the buying power of your hard-earned money. The best way to protect your money from the effects of inflation is to adjust your budget to outpace the inflation rate. Here are some tips for adjusting your budget and other ideas you might want to consider. Number 1. Track inflation and adjust your investments accordingly. Tracking inflation is vital if you want to beat it. Keep an eye on the inflation rate and adjust your investments accordingly so that you can maintain or increase the purchasing power of your money over time. You must learn the basics of how inflation can affect your asset values. The best types of investments to beat inflation are the ones guaranteed to bring in cash or those with values that increase along with the inflation. For example, you have a rental property and units being rented out. This is one of the best investments to beat inflation because the rental fee can increase along with the inflation rate. Aside from real estate, commodities are also suitable investments because their value is highly linked to market conditions. If inflation rises, the value of these commodities can also rise in the market. If you are going to consider investing in bonds, make sure to opt for inflation-indexed bonds, as they have a valuable interest rate. Number 2. Consider short-term investments. Short-term investments like money market accounts are great for beating inflation because they provide a safe, low-risk way to invest your money while still earning a return. It might be surprising to hear about this tip because most people believe that long-term investments make more sense to beat inflation. This is something that needs to be carefully weighed. Often, long-term investments are more vulnerable to inflation fluctuations, whereas short-term investments are more accessible and easier to liquidate or maintain cash flow. Number 3. Consider investing in index funds and ETFs to maintain your purchasing power. Index funds and exchange-traded funds, ETFs, are great investments for long-term portfolios because they help keep your money's buying power the same or potentially higher as inflation erodes currency values over time. You should diversify your portfolio by investing in various index funds and ETFs. The process of diversification lowers your risk because you can evaluate the performance of each type of fund, especially against the possibility of losses resulting from inflation. Number 4. Research options like bonds, Treasury inflation-protected securities, TIPS, and real estate. Bonds are a low-risk option for investors who want to beat inflation. While the return on bonds is generally lower than stocks or funds, it's still higher than the rate of inflation. Treasury inflation-protected securities, TIPS, are another great way to beat inflation by investing in government bonds that are adjusted based on inflation. Continually research these products to determine which is the suitable investment for you. If you are unclear about your options, you can always consult a fund manager or investment expert to guide you in choosing the right investment product to beat inflation. Number 5. Real estate. Real estate is another good option, as property values usually increase over time and provide steady rental incomes. Industry and finance experts agree that real estate is one of the best hedges against inflation. Real estate prices outpace inflation rates when it comes to growth, which means that whatever you invest in real estate now will have a much higher return than the inflation rates in the future. As we touched upon previously, you are also leveraging the effects of appreciation to protect your asset against inflation and to bring in a consistent income if you own a rental property. For example, say you own a rental property unit that is valued at $1 million and generates $15,000 of rental income per month. In a few decades, the rental income will likely be valued at triple or more, effectively beating inflation. On the other hand, the value of that rental property could also grow exponentially in that same amount of time if you choose to sell it for profit. Number 6. Take advantage of tax-deferred retirement accounts. Retirement plans like 401ks and IRAs are a great way to beat inflation because you can save for retirement with pre-tax dollars and let the money grow without being taxed. This allows your money to compound faster, and you will pay fewer taxes over time. You can maximize the value of your money since you won't have to contend with annual taxes on the interest earnings on your account. Therefore, You should maximize investment in tax deferral accounts to beat inflation and put in as much contribution as possible toward these accounts in anticipation of higher inflation in the future. Number 7. Monitor spending carefully. One of the most important things you can do to adjust your budgeting to beat inflation is to monitor your spending closely. Track your expenses and ensure you're not overspending in any area. Knowing where your money is going will help you make more informed decisions about how much you need to save each month to stay ahead of the effects of inflation. Create a monthly budget and make sure to stick to that budget. Minimize any financial disruptions to your budgeting efforts, so you protect yourself from the possibility of overspending. In the same way, you should also refrain from acquiring debt. Number 8. Invest in commodities and precious metals. Commodities and precious metals like gold and silver can effectively protect your wealth from the effects of inflation. Since these assets tend to rise in value as inflation increases, they can help you maintain the purchasing power of your money over time. Commodities are a unique class of assets correlated with inflation. A few examples are soybeans, gold, and oil. These high-in-demand products can be purchased independently or used to manufacture other products. You can expect that with the steady flow of demand, there will also be a continued market value rise, even as inflation goes up. Number 9. Make regular contributions to savings accounts. Making regular contributions to savings accounts can help you beat inflation by providing a steady stream of income that keeps pace with the inflation rate. Try to set aside a certain amount each month and make it a habit so that you're always saving for the future. It also pays to research savings accounts that offer a high interest rate. You can take advantage of every dollar of interest you earn from your savings by opting for these types of accounts instead of putting it elsewhere. Any amount of money you can save that is earning high interest is a strong step toward beating inflation. Number 10. Consider alternative investments like cryptocurrencies. Cryptocurrencies like Bitcoin have become increasingly popular as they offer a new way to invest and protect your wealth from the effects of inflation. Cryptocurrencies are digital assets that can be used for investing and trading on the market, but they do come with their own risks. It's essential to research and understand the potential benefits and risks before investing in cryptocurrencies. You should always take a cautious approach. Never invest your money in something you did not study or do not fully understand. Make educating yourself a priority to ensure that you can help your money grow instead of seeing your hard-earned money vanish into thin air. The tremendous pace at which inflation is growing right now has opened many people's eyes to the importance of planning for your finances in the future. It's not enough to have a savings account because as the cost of basic commodities grows, your money might not offer the same value in the future. You must be resourceful and diligent in looking for investment opportunities to help your money grow and beat inflation. At the same time, you need to develop effective budgeting strategies to get the most value out of your earnings. There is no one-size-fits-all approach in your plan to beat inflation, but you can use the ideas we have presented to help you decide which approach is best for your financial circumstances.